Welcome back to the channel, everybody. So this article is titled BNY's Tokenized Deposits Pilot Enters Regulatory Spotlight. BNY Mellon. Remember that name? This could get deep very quickly. Keep your eyes on the activity at this major bank. Ripple has deep ties with BNY Mellon. But let's read this little tidbit first, and then I'll give you my thoughts. It begins here. BNY Mellon confirmed it is exploring tokenized deposits to let clients move money on blockchain rails. I just want to insert. Hasn't Ripple been talking about RWA tokenization for a long time? 1. 2. Hasn't BlackRock been talking about RWA tokenization for a long time? That's 2. BlackRock and Ripple have a particular relationship. BNY Mellon, now getting into tokenized deposits, needs to be able to move that value globally. That's the whole purpose of doing this. In order to move value globally, you need XRP or something like it. You need liquidity and you need a bridge currency. You need liquidity and you need a bridge currency, something where that original fiat currency, which on that end, BNY Mellon is going to handle the original cash or fiat currency, then they'll buy the RLUSD for the client. RLUSD then rides across the rails, but if it wants to move globally, RLUSD gets converted into XRP, then it rides quickly, touches XRP for a moment, and then on the other side, it comes out RLUSD and then is converted back into whatever fiat on the other side. Makes sense? My apologies if I didn't explain that so eloquently. But if they want to move something globally, XRP is involved. Simple as that. I mean, that's if it moves that way. Now they can just use tokenized value outright. They don't have to go through a stable coin. You want to be honest. They can just have tokenized value moving across the chain directly. And I'm not saying they're going to use the XRP. I'm just playing with the idea because why would you not? And that's why I brought up BlackRock, Ripple in this relationship with BNY Mellon, which they announced over the summer. That was a big thing. So I think people should remember that. Why would you not use the best in the business? That's why my mind goes there. They already are working with RLUSD. So that means they're already also working with XRP. You can't get around that. They're tied together. You don't get global movement without XRP. You don't. Western systems are cut off from the Eastern. Eastern systems cut off from the Western, and that's only growing. We know, we heard it from the horse's mouth. XRP is going to be involved. Now, I also acknowledge this is the beginning, of course. Nascent phase, right? But things will grow. Wait, let me get back to reading this, but I'm trying to lay my thoughts out. You following so far, right? Makes sense. Keep your eye on this. That's all I'm saying. The initiative, listen to this. The initiative is part of its plan to modernize a $2.5 trillion a day payments network. Keyword, network. Listen, folks, everyone, all of these companies, when I say everyone, all of these companies are going to work with a multitude of bank coin companies, period. You saw it with FedNow. You see it with what Swift is doing. With Swift, I showed you, look at those videos I released. I broke it down, showed you from the Swift website, other bank websites. It's just an overarching thing that sits on top, but everything else, the preferred DLTs connect to it. It literally doesn't get in the way of anything at all whatsoever. And once again, Swift is supremely siloed, right? But I'm just saying that to show that they're all using this conglomeration of systems. This will be no different. BNY Mellon will use a particular blockchain for this, another one for that, one for smart contract. It'll be a conglomeration. You get the best of the best. It's like, how can I put it? It's like if you know MMA, some guys are very good. Don't get me wrong. Everyone dabbles. That's all it is, really dabbling. I've been watching MMA since 1994. But it's still to this day, no matter how far they come, it's dabbling. So some guys are very good at boxing. Some guys are very good at kickboxing. And some people are good at wrestling. You know, you have your Khabibs. You have your guys that are good at kickboxing. You have people that are good at regular boxing. At least it's, you know, like I think like your Mike Perry's, etc. That's what this is like. So you go out and you get those particular pieces and you bring them back to yourself for utilization. That was terrible. That was a terrible way to put it, but I mean, does it make it clear, right? That's what they're going to do. Reach out to different blockchains, work with different blockchains. The precedent is already set. All right. So is there a high possibility that a company they're already working with, Ripple, that has some of the absolute best, if not the best, cross-border technology, payments technology on the planet, liquidity technology on the planet, is there a possibility, a high possibility that they'll work with that company that they're already working with to a greater degree? Yes. Yes, there is. I'm not saying it's a guarantee. I'm saying I'm keeping that in mind. $2.5 trillion. I definitely want to keep that in mind. All right. You think they worked with Ripple and don't know about their technology? The only other blockchain that they've worked with, from what I've seen with BNY Mellon, look this up, is the Goldman Sachs private chain, which is, did you take a look at that? Look at the specs on that Goldman Sachs. Folks, no siloed system, no slow, antiquated siloed system that's trying to play catch up is going to beat the XRPL. It's not going to happen. So if they're working, that's the best that they worked with, then XRPL and Ripple technology definitely has a chance. 100%. Okay, let me paint another picture. Remember recently when Brad Garlinghouse spoke on the SWIFT system and he was just pshawing it like that's nothing. And he said the same thing that I was saying, just in a different way, that they're playing catch up. He alluded to it being an inferior technology, which it is. I'm saying that outright. I showed you. It's not meant to take the spot of anything. It's just meant to keep SWIFT in a certain position. Preferred DLTs will connect to it. That is the driving force. So if the preferred DLT is the XRPL or Ripple technology or SBI technology, then XRP remains dominant and in position. So, let's keep going. $2.5 trillion, folks, is on the line here. The initiative is part of its plan to modernize a $2.5 trillion a day. Whoa. A day payments network. What happens to the price of XRP if it's moving a little bit of that value? Huh? Ripple has been talking about RWA even recently, how they want to go into it heavy. Okay, who are they working with? Who are they working with when it comes to RWA? They're all about the banks, right? They want to go heavy with RWA, correct? Okay, who are they working with? Huh? You think they're going to come out and say it so that price can explode overnight? No, or are they going to wait patiently? Orchestrate everything so that the banks and companies like Ripple, et cetera, these elite people reap the benefits of the lion's share of value that's going to come in. They're going to orchestrate everything. So they're not going to come out and just say it. They're not going to come out and just say it. This is why we as researchers, we're piecing a puzzle together. $2.5 trillion a day. What happens if we take a piece of that? They're already working with Ripple. There's not that many steps to say, hey, you know what? Let's move some of this tokenized value on your chain that already moves tokenized value efficiently. Let's keep going. Let's keep going. The pilot aims to show how regulated deposits can settle in seconds instead of days without leaving the banking system's protection. Next section is titled BNY explores tokenized deposits amid evolving policy frameworks. See, we're still getting through that phase. There's all of these policies that have to change, regulations that have to change. And although we've gone through a lot, there's still much more to come, which does stretch out the timeline a little bit. How much? Who knows? Who is to know? Let's read this. Earlier this year, the bank launched its digital asset data insights platform. It broadcasts fund accounting data to Ethereum through smart contracts to improve transparency and accuracy. In July, it introduced a tokenized money market fund system that records mirrored shares of GSDAP. The setup enables near instant settlement while BNY maintains the official ledger. Intercontinental Exchange ICE announced a strategic investment in Polymarket to distribute event-driven market data. It also agreed to collaborate on tokenized projects. Another sign mainstream market infrastructure is turning blockchain native. Yes, this is why it's important for one to ask themselves which ones are at the forefront, which Bitcoin companies are at the forefront. Then look into how much work they're doing. What connections do they have? What announcements did they make? What partnerships do they have? What deals are on the table? That's going to be important for it, not financial advice. All right, just my humble opinion. But that's important to know which ones you can capitalize off of the most. It continues, macro forecast, regulatory posture, and risk. The European Banking Authority published its report on tokenized deposits. It found only one live European case, but called for shared definitions under the MICAR to avoid overlap with e-money tokens. The watchdog also warned that programmable deposits could affect liquidity. Read that to you again. The watchdog, and I've been talking about the ECB, have I not? Everything that's going on right now, the banks, I'll phrase it this way. The bank's esoteric rebellion against stablecoins, that's what it is, because they're saying it's not stable and they're against it, but they're using it anyway. And the mainstream media doesn't even talk about that. So I'm going to call it esoteric, right? It's an esoteric rebellion. That versus security, which you saw Ripple up that security. Why'd they do that? They're working on increased security. It's for the banks. That all works in favor of XRP, HBAR, Solana, Chainlink, XLM. It works in their favor. Let's keep going. It found only one live case, but called for shared definitions. Okay. The watchdog also warned that programmable deposits could affect liquidity, requiring new prudential guidance. Folks, they can't get around that liquidity aspect. I told you. See, keep an eye also on those reserves. We just had another company. Was it Gummy out of Japan? Building an XRP reserve. Why? That XRP can be used if they inflate that price. Run that price up. They create a liquidity pool that they can draw from alongside institutions that provide funds like FDIC or central banks. Now they have a source that they can control. And each bank can pull from that pool, that allotment of XRP that they have, or financial institutions can begin to provide that liquidity if they see fit to do so. I mean, the possibilities are endless right now. But they're definitely worth considering. They're accumulating a lot of XRP very quickly for these reserves. These treasuries, my apologies. Treasury reserve, same thing to me. But treasuries, that's the nomenclature that they're using, right? Why? Is it just for profit? You sure about that? That utility of XRP is just as valuable as the outright value, the ability to make capital off of it, gains off of it. And that's where the real magic happens. Because when they begin things like that, using it for liquidity, the growing need for bridge currencies, because there's increased fragmentation. We even read that in bank documents recently. Did people watch these recent videos? I've been dropping some pretty good information, in my opinion. By the way, if you like this type of information, take those powerful hands like this and hit that like button a few times. Why not? Why not? RWA value flowing across the XRPL, trillions, interbank payments. What does it do to that price? There's no way that price stays below $10, $15. No way, folks. If you add all of that up, and ask your financial advisors to do some calculations. Ask your researchers. Some of you have researchers you're paying. Ask them to crunch some numbers. If not, maybe you use your AI. I don't know how much you trust the AI, because it will tell you. I said this before. It'll tell you things confidently and be confidently wrong. So I think in the future it'll be much better. But I'm a little bit wary of it. But even it can do calculations pretty good. Some of them are made for that, right? You can put the numbers into your AI. Ask it some questions. And you tell me what number it comes back with if XRP takes just a piece of all of these different trillions. Ripple gave a huge hint when it said it thought it could take 14% of Swift volume. How much value is that? In how many years did they say? How much value is that? How does that affect XRP's price? Now, you take that number, extrapolate it. I mean, they gave you something to work with. Extrapolate that into everything else. Just take a reasonable percentage of all these things that XRP is involved in. And you tell me what that price is. And you tell me, do you like it? And you tell me, there's no way that price that you're going to come up with is below $10. There's no way. No, in my humble opinion, I mean, maybe I'm wrong. Maybe I'm wrong. To each his own. I would respectfully disagree with you, but your thoughts are yours and mine are mine, right? All right, so now, that's an oversimplification. Like, I know that already, Mick. Let's go here. We have some more news, but you know what? Let's touch on some Bitcoin, and then maybe we can get to some gold news today as well. Gold's been doing fantastic. Absolutely fantastic. All right, but let's touch on some Bitcoin news here. This article is titled, Central Banks Will End Up Holding Bitcoin in Their Reserves, even though it is, quote, backed by nothing. That is so ridiculous and nescient, I like that word now, to say such a thing. Deutsche Bank predicts, no disrespect. I say this in absolute humility. I don't trust the banks at all. I would never trust the banks. Never. Nothing that they say. This is a business and it's a brutal one. They'll tell you anything so that they can have everything to themselves, that they can benefit from themselves. You know, they've been reaping huge benefits all these years off of deposits and offering the people pennies in their savings accounts. Right. That's not entities that I'm going to trust. So I'll read this and there's something maybe I may take from it. But at the same time, I always have a questioning eye when I read anything from them where they're trying to steer my mentality. But let's continue on here. It's backed by nothing. Oh, listen, are you really concerned? Are you concerned with that? Let's see. BlackRock is getting in on reaping the value from Bitcoin. All the whales reaping the benefit of the value from Bitcoin, making gains from Bitcoin is what I mean. I'm also here to make gains from Bitcoin. That's all that matters to me. And most normal people, we're not worried, it's backed by all this semantical nonsense. No, the people are here to make a profit from Bitcoin, and they are. Not financial advice, just my humble opinion. And they have been. But they say this because in their delusion, they believe that they can sway the people. It's backed by nothing. Your fiat currency is backed by nothing. Some people jump out there real quick. It's backed by military might. It's backed by nothing. It's all agreed upon value. Shake hands. We agree that you're going to trade this for this, and it's all made up. It's like tea time. You pour the little child pours the imaginary tea in a cup, and the parent takes a sip, and that's what everybody's been doing with fiat currency. It's just agreed upon. Most things in human life is like that. We agree that this has a value. This is down here. This is up here. This is this position is going to be praised. This position is not praised. It's all that. It's all tea time. Just most people don't want to accept that reality, and I'm not going to force them to. That you believe opposite, that's up to you. All right. So now let's continue on here. Deutsche Bank predicts Bitcoin could be added to central bank reserves, which will explode the price. Didn't I say this earlier in the year? I said there's no way anyone who wants to profit, now I say anyone, I mean companies, banks, is going to sit on the sideline and let Bitcoin's prices go through the roof, knowing where it could go. Free money on the table. There's no way they're going to sit on the side and let that happen without trying to grab some of that capital. No way. No way. And we all know it. That's why everyone's here at the Bitcoin table with their fork and their spoon, ready to eat. Ready to eat. And we're hungry, right? Okay, let's keep going. If the central banks get behind Bitcoin, expect a massive explosion. Look at what happened with gold. Way back when we first got into gold, you and I, it was very cheap. Where's it now? They said gold wouldn't go to 2,000. Central banks got behind it, went to 2,000. They said gold wouldn't go to 3,000 is what they told me. Central banks got behind gold even more, went to 3,000. They said gold wouldn't go to 4,000. Huh? What's going on with gold? You tell me. I'm listening. You tell me. What's going on with gold? Huh? Right. If they get behind Bitcoin, holy smokes. If they get, let me tell you something. If the central banks get behind Bitcoin, then I don't know when that's going to happen. They're saying it could be added to central bank reserves by 2030. Will it take that long? I don't think so. I don't think so. That's a little late in the game. I don't think so. But I could be wrong. Maybe there's a reason they're saying this. But if they get in early and that price goes up, I may be heading out a little earlier from Bitcoin than anticipated. I'm just going to let you know. I'm not here to play around. I'm here to win. But it says here, by 2030, as its volatility falls, you don't say. Same thing's going to happen with the bank coins. So the volatility falling, now you don't have that excuse. They can play with it how they want because there's no fear. That means more capital comes in as the volatility is lowering. More legacy interest, and that's a lot of value, is going to be focused on bank coins and Bitcoin, and they're going to enter, which is going to drive those prices higher. Which means even though what we see now may be very good to many people who got in early on a lot of these things, including Bitcoin, that means later on, once things are even more stable, the picture may be even brighter. Maybe. All right. It says, despite not being backed by anything, unquote, unquote, of course, they want to ram that home. They have to put a little pinch of negativity in there. That's on them. I'm not here to digest their negativities. Although I acknowledge what they're saying, I don't see the relevance in it, but that doesn't mean there's not relevance. It's up to you to decide. I decide for me. Recent surges in gold and Bitcoin driven by central banks seeking diversification and companies creating Bitcoin, quote, treasuries, unquote, show Bitcoin's growing appeal as a safe haven asset. It also can lead one to believe that once more, no one's going to be sitting on the side while companies are creating treasuries. If you see something where that asset is being collected in treasuries, that price is going to go astronomical. There's a multitude of reasons. They don't do this for one reason. There's a multitude of catalysts that are so powerful that they must collect this in a treasury in order to benefit from it. In my humble opinion, and maybe once more, I'm not as eloquent as I typically could be, but I think you get what I'm trying to convey, right? XRP, Bitcoin treasury, XRP treasuries, Solana treasuries, Chainlink, we're hearing about treasuries, all super potent. There's a reason, a multitude of catalysts. One must ask themselves, what is this multitude of catalysts? I mean, I've been talking about these things for quite some time, but I think it's better for one to answer that question themselves. Seeing things for yourself, knowing them for yourself, there's nothing more powerful than that. If one can grasp a certain understanding from what they're going to see. But that's up to that one, right? All right, so let's scroll down here, see if they have anything more. I like this Bitcoin news. The price of Bitcoin briefly topped $125,000 yesterday. That's nothing. My humble opinion, that's nothing, folks. When it comes time, believe me, I'm going to say, hey, the catalysts are gone. Bitcoin's going down, but that time has not arrived. I'm going to call it like it is. I'm at that point in my life, folks. You're going to get the most raw thoughts from me ever. Some of you are at that point, right? You get older. You've experienced a lot. You feel like you've done everything you want to do, and only the truth is left. That's it. Well, I know some people are going to battle with me semantically over that because it's based on perception, right? Perception. And then perspective is perspective is molding your perception. I get all of that. I know. So when I speak truth, I guess if you want to consider it a personal truth, you could do that, I suppose. It's okay by me. All right. You got to understand a lot of people when they're writing to me, you got to understand they're very combative. I know you don't see it, but I do. A lot of people very combative. So that sticks with me a little bit when I'm speaking here. The factor is making That factor is making Bitcoin more like gold. If you're talking about in potentiality, okay, yes. But once more, that catalyst of the central banks needs to be there. It needs to be there. The catalyst of Bitcoin being trusted like gold is not going to be there. It would take forever, and we don't have forever here. But the central bank backing and the possibility, the potentiality of it exploding in price because of that, yes, that's there. So I guess in a way we did sort of get a little bit of gold news in a bit. Let's go here. Wait a minute. One moment. I really want to cover this gold. Here, we're gonna squeeze this in. All right, you with me? You follow me? Okay, not follow me. I don't want to say that. I don't want you to have the mentality of a follower. My apologies. But are you with me? Okay, all right. Gold futures rise above $4,000 per ounce for the first time. I appreciate every single one of you being here. Thank you for being here with me. Thank you for listening to me. Thank you for coming on my channel, whether you subscribe or not, click the like button or not. I appreciate it. I'm glad in this lifetime that I've had the opportunity to speak to you all and spend this time with you and convey my thoughts. And let me tell you, I couldn't put a word to it, what I feel toward you for listening to my words and being here with me. I'm very serious about that. And trust me, based on things I've experienced in life, I'm very grateful and very appreciative of every single moment. Believe me. So let's continue on here with the gold news. Gold futures soared above $4,000 per troy ounce for the first time Tuesday. Oh, I love gold. Oh, yeah, I do. As many investors seek a safe place to park their money during continuing U.S. government shutdown, the going price for New York spot gold has previously closed at $3,960 per troy ounce. The standard for measuring precious metals on Monday. This is gold sales. I don't know why I read it like that. It just came out like that. Like that. You do this for long enough. Sometimes you're saying stuff. It just comes out strange, but it's entertaining to me. I entertain myself sometimes. The going price for gold sales can rise sharply when ancient investors seek secure investments for their money even before the shutdown. I think that's a smokescreen. I think they just took the opportunity to get more gold. These shutdowns, it's not the first time this has happened. Oh, the U.S. government shut. It's not the first time. It probably won't be the last, but could it be significant? Sure. Okay. But I think when it comes to gold, there's things way worse out there going on right now. I think it's a smokescreen. They just wanted to acquire a little bit more gold without the people knowing the real catalyst as to why they acquired that gold. Make sense? For people to believe it was this, it takes the eyes off of the problems in the banking system, the fear of the fiat currencies collapsing, banks collapsing. Even though you're hearing about these problems all over the place, just like Japan. You just heard about the problems in Japan, right? Then over the summer, we heard about the problems in China, right? Oh, stimulus, right? We heard about the problems in the UK, correct? We know about the problems in the US, but why are the mainstream is not talking about that? That's not a reason to get the gold. That's not the reason that central banks have been buying record amounts of gold, at least buying record amounts of gold to protect their value because they fear a collapse of any kind. Because when that collapse happens, there's going to be massive amounts of contagion. According to Christine Lagarde, there's contagion. What's contagion? That's like a domino effect. One domino falls and hits the other, and then that one falls and it hits the other, and that one falls and hits the other. Right. That's how a lot of bank collapses would occur. Contagion, domino effect. So, I mean, but no, that's not the reason that they're all buying record amounts of gold. It's the shutdown. Yeah, it's a shutdown. Like, look over here, this shutdown. While the real fire is over here. Massive catalyst, which shows that gold probably will continue to rise for quite some time, right? But just my humble opinion. So now that you have the information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.